Hi, everybody. It's Katie back here today with Jeff Miltenberger from NFM Lending. And today we're going to talk about something a little bit different. We're going to talk about purchasing a second home or an income property. So, Jeff, I get tons of questions about this. Right now, with interest rates being as low as they are, it's such a good time for people to invest in some income property or even that, getaway that they've been searching for a long time. So, what can you tell us about how to qualify to start on a second property?
Cool. Yeah. So I love this topic as well. I think it's important, especially with the real estate market moving as quick as it is. There's going to be a lot of good appreciation there, that we can take advantage of by buying more and more real estate. So we still want to be diversified, but real estate's a great investment right now. So on a second home, I have a second home myself and I love it. It's a place to get away. The nice thing about buying a second home is it is very similar to buying a primary residence. The interest rate is identical. So you are buying your primary residence. Let's say today's rate is 2.625, which it's close around there. If you're buying a second home, the rate would be the same, 2.625, no difference from that standpoint. Another huge advantage of buying a second home is the down payment. Typically, like if you're buying an investment property or an income producing property, like you're talking about earlier, you need to put about 20 to 25% down. So it's kind of a large chunk of cash that you need to get out of there. So what we're looking at in a second home is you only need 10% down. So that can be a huge difference from the standpoint of how much you can qualify for and things like that. You don't need as much money out of pocket. So if you want to go buy, let's say, a $400,000 house as a second home, maybe east of the mountains, so you can go snowmobiling and do whatever else you want to do. You can put only 10% down. So $400,000 house, you need 40 grand, and you get a great rate and a pretty sweet payment. So it's actually pretty easy. The downside of buying a second home is you got to qualify for both payments, though. And that's the big thing is, do you have enough income to support two pretty large mortgage payments? And that's really where a lot of people are going to get stopped.
And a lot of people these days seem to be taking out like HELOCs or using their equity in their home to use as their down payment. Are you seeing that as well?
Yeah, and I should have brought that up. So I'm glad you're on the call directing traffic here, because I would have totally missed that part. But yeah, that's a great opportunity because of all the equity we have been enjoying over the last couple of years in the state of Washington. A lot of people do have a ton of equity out there that they could utilize and pull out. In some cases, it might make sense to just do a refinance on your first mortgage, get a lower rate, and pull the cash out that way. But if you already have a lower rate and you don't want to go through refinance, or refinance doesn't make sense, a home equity line of credit to access that extra equity is a great way, a great tool to pull out equity and use it for a down payment on a second home as well. So great idea, Katie.
Yeah, it's a really good opportunity for everyone with the low rates that are out right now to leverage the equity that they have into a second property. And then hopefully if rates continue to stay low, you can just keep leveraging and building that hopefully generational wealth is what we're going for here, right?
Absolutely.
So if you're not looking for like a vacation second home property, but you want to leverage the equity you have, you've got down payment money, and you want to buy a rental income property, what does that look like?
Yeah. And that's a great transition over there. It's like, so the downside of a second home is a lot of times you may not qualify for both mortgage payments. On a second home, you cannot use rent to offset the payment at all. On an income producing property, though, you can use rents right out of the gate to offset the mortgage payment on the new property that you're buying. So in a lot of cases, it's a net zero qualifier, meaning that the rents coming in are enough to cover the mortgage payment completely. So it has no impact your qualifying amount. So as long as you have good credit and your ratios are in the right space, you should easily be able to qualify for a rental producing income property, an income producing rental property. There, we got it right. That was a couple of string of adjectives there.
Is the down payment the same, 10% down, or what kind of down payment does it look like?
So on rental properties, you can do as little as 15% down, but it's pretty expensive. The rate is pretty nasty. The cost of the rate is pretty nasty, meaning you're going to probably end up paying points. And then you also have mortgage insurance on the loan as well. And the mortgage insurance is going to be pretty expensive too, because it's an investment property versus an owner occupied. So ideally, most people on investment properties, they want to try to put between 20 and 25% down, just to kind of maintain some sense of reasonable cost on buying that investment property. Quite frankly, in 26 years, I don't think I've ever done a 15% down investment property. Most people are 20. And when they find out the difference between rate from 20% down to 25% down, a lot of people try to come up with that extra 5% down because the rate is significantly better, putting that extra money down. Now, you can still use home equity lines, like you said, or equity from a current property and pull that money out and use that as a down on a new property. One big difference, too, on buying properties is maybe you get a gift. Maybe you have a family member or relative or grandma wants to gift you some money and you want to use that money for the down payment. This is a differential thing, too, is you can use it on a second home. You can't use a gift on an investment property.
Oh, interesting.
That's a huge difference. So investment properties are different in that way, that the money must be sourced and be coming from the person who's buying the property. No gifts allowed, period. Not even for, well, I guess closing costs, they might be able to cover some closing costs, but again, gifts are not they're not allowed for the down payment, and things like that. So we just got to be really careful that we got the money we need and we know it's coming from a source. Now, if they are going to get a gift, Katie, a gift is considered seasoned funds after 60 days too. So even if it is a gift that they're getting, maybe they can get the gift early on, put it in their account, wait 60 days, which is seasoned, and then we can utilize those funds as their own at that point after 60 days is up. So that could be potentially an option if they were going to inherit some money or something like that.
Interesting. Now you keep talking about the rate being different on an income property. So give us an example of we understand it's going to be higher, but how much higher are we looking?
You're probably looking at like, I was saying like 2.625 would be a decent, representation of what a 30-year quote would be for a second home. On a rental property, a 30-year fixed option would be probably more around 3.25 to as high as 3.75, depending on how much you put down. So
but
it could be
still
significantly
actually pretty
bigger.
low. I mean, it is significantly higher than a first mortgage, but I mean, geez, the rates are so low right now. Like 2 years ago, that's what you were buying your first home for, that rate.
Yeah.
Now you can get a second income property for that rate. That's really good. That's still really, really good.
No, it's amazing.
You say higher rates, I'm thinking like 10%. Like, I'm like, what are we looking at here,
Isn't that funny? We don't realize how good it is right now. It's pretty crazy that way.
Yeah. So what other limitations are there on buying a second home? Are there loan type limitations, location limitations? What do you have to do?
I'm glad you brought that up. So on second homes, there are location limitations. Like you can't buy the house down the street from you and consider it a second home and get a great rate on it. It just doesn't fly. The requirements are that the house that you're buying as a second home needs to be at least 100 miles away from your current property, or it needs to be in more of a resort type location. So, say you live in Issaquah and you're buying a house up in like Snoqualmie Pass or something like that, and it's not quite over 100 miles away. Well, Snoqualmie Pass is considered more of a resort area. You're in the mountains and things like that. That would qualify with the 10% down as a second home purchase in that particular situation. So you do have some opportunities there of a second home to make it work. But I have had a lot of clients come to me and say, hey, the house down the street just came on the market and I want to buy it as a second home. And I'm like, no, that ain't going to work unless your house is in a neighborhood and that house just down the block is on the ocean.
Right.
It's going to be a difficult argument to say, yeah, we're buying this as a second home. It just doesn't make sense. With a rental property, there really aren't those restrictions. You can pretty much buy anywhere. It's just you got to put a lot more down for that part of it. A couple other notes on that is on a second home, you do need 2 months of reserves in the bank after closing. Reserves aren't used for the down payment or for any other purpose other than qualifying. So you do need some money in the bank after closing that needs to be verified in order to qualify for a second home. And then for a rental property, typically we want to see about 6 months of reserves in there. Now, everyone's a little different. There's an automated system we run, and it basically tells us what it is. But those are the standards that we've been seeing.
Okay, and then for the 6 months on the income property for rental, is that the reserves that you're looking for are on your first mortgage and your rental property, or is it only the reserves as pertaining to the rental purchase?
For the rental purchase.
Okay.
Yeah.
Very good.
Now, if you start to have multiple properties, that changes. There's a spreadsheet that we need to start pulling out and start filling in, and it kind of dictates how many reserves we need as you go higher and higher. But the standard that we look for, that we just want just to be sure, is the 6 months sitting there. Now, that money, Katie, can be in a 401k.
Okay.
That money can be in an IRA. I mean, the reserves part of it doesn't necessarily have to be liquid cash in the bank. It can be other accounts as well. But again, those reserves cannot be a gift either. So they have to be money that the client has. And again, it's not used in the process. It's just money that we verify that's sitting there at closing. Once the loan closes, they can do whatever the heck they want with that money. So if they do have 6 months of cash in the bank and savings, and they were going to use it for something else, they can totally, the day after the loan closes, they can take that money and go use it for something else.
Great. Now, what if you want to purchase another home out of state? A lot of people right now are thinking about moving out of state, or even just getting a vacation property. Let's say you want to go to Coeur d'Alene and buy a vacation property or something. How does that work?
I've been seeing a lot of people moving out of state. We're seeing a lot of transition to Arizona. We're seeing actually a ton of transition to Texas, of all places.
Yeah.
I mean, Austin, Texas is like the hottest IT market, it seems, ever. So the keys with buying out of state, really, it's just about hooking up with some professionals in those areas that can help you do the same thing that they were trying to do here. So from that standpoint, they need a good realtor. You can find them a referral over there, so they're set up with a realtor to help them search in those particular areas. Obviously, you want to try and find someone that knows the area really well to give them advice. And then on the lending side, sometimes lenders are licensed in multiple states. Myself, for example, I'm licensed in 8 states right now, up and down the West Coast. So I can do loans in Idaho. I can do loans in Colorado, Arizona, Oregon, California, Texas, and I just am in the process of completing my licensing for Nevada as well. We're starting to see a lot of people moving into the Nevada area. So I think the process itself is very similar to here. Again, the key is just make sure you're working with some top-end, top-notch talent that's going to help you in that area. A good real estate agent and a good lender. If there's a state I'm not licensed in, I just reach out to my company leads and say, hey, do we have someone licensed in Louisiana or Alabama or wherever it is? And, try to track down a top end, loan officer that I know will take great care of them.
Perfect. All right. Well, I think you've answered all my questions. These are the questions I get the most often from my clients when they're looking at buying other properties. Do you have anything else to add? Did we leave anything out? I feel like we've covered it pretty well.
No, you did a great job. You covered a lot. You covered a lot of the stuff that I forgot about. So I'm glad you brought it up. So it's teamwork all the way. I love it. I think it's a great topic too. So I'm glad you thought about this today, and that we're sharing it with everybody out there.
Yeah. If anybody else has any questions about moving out of state or purchasing a second home, or maybe you're looking into that income rental property, or some people are purchasing second homes as not as a regular rental property, but maybe like a vacation rental property. A lot of people are doing Airbnbs and VRBOs and all that sort of stuff right now. So if you have any more questions about the details of how that works, or how you can qualify, down payment, any of that stuff, be sure to reach out to Jeff here. He is the expert in all of that, and we really appreciate all of his help. So thank you so much for being here today, Jeff, as usual. And we'll see you guys in the next video, and hopefully have some more fun information to share with you.
Absolutely. Thank you.
Thanks, Jeff.